Education with the full major analyst update for the 21st of November 2012. Hi guys, hope you had a fantastic day yesterday. Not a lot of movement yesterday, and I think you guys were, if anything, probably procrastinating. And then we had it this morning as we found out that the EU is no closer to sorting out Greece's issues, and so it's now being pushed forward, and that's no good. So what we've seen this morning, as you can quite clearly see on my 4 templates, time frame template for euro against US dollar, you can quite clearly see on the 4 hour here we had a nice bearish engulfing candle that took place this morning, and at 4 a.m. this morning, nice move to the downside, and you can see the price has now been moving sideways at the institutional level on my hourly chart, which coincides quite nicely with a fib retracement area if you see on the daily, which happens to be the 38.2. So ideally what's happening now, as you can see over the past month, a couple of weeks or so, is we've had that break over November. This is the daily chart. You can see we had the break in November, and since then price has actually moved lower, and now we've seen the pullback over the past week or so. We've seen the price moving back. However, the most important thing is price for a long period of time here, you can see, was using the institution moving average as very much as a support area. And so when price broke through here in early November, we saw the price breaking through quite tentatively, not very directive. So we wanted to see that direction. Sure enough, we had this bearish engulfing candle that cancelled out these two indecisive candles at the underside of the institution moving average, and in doing so found resistance, okay, and then pushed lower. Now we've seen a correction over the past week, and that correction now is still trading at the underside. So what we wanted to see was a genuine, if this was a genuine break negative, we wanted to see price confirming that it was still negative. So it still needed to stay at the underside of the institution in particular, but also this major support and resistance level here, just short of the 128500 mark. And the candle yesterday looked very, very top heavy. We saw price really trying to muster strength to break through that consolidation area that we're talking about, this hard right edge. However, procrastinating, getting no closer to sorting out Greece's issues. There's been a lot of issues with Greece. They're trying to move the dates a couple of years forward to pay the next part of their bailout problem. But anyway, that didn't stick well, and sure enough, they didn't come up with any plans, and therefore nothing was approved, which meant that the euro took a bit of a tumble. And in doing so, what we're seeing now is a very bullish day a couple of days ago. This is a Monday, followed by a very indecisive day yesterday, and we've got a bearish fall this morning. This could constitute to an evening star. An evening star at a resistance area at the top of a little trend, a minor trend here. Okay, this happens, evening stars happen at the top end of a trend, and it's a really minor trend, a pullback here, but also we have to see a resistance level above it, and sure enough we do have one, quite a large one. So this could be our evening star on our daily. So for this to be a genuine evening star, we obviously want to see this bearish candle continue to fall, and ideally continue to fall below 1275. Okay, once we get below 1275, this will generally constitute to a real resistance area candlestick formation, telling us there's definitely resistance above price. And what we should see over the prolonged period of time, or heading into December particularly, is the fact that we are seeing lower swing, which is constitutes to a lower swing at the underside of a support, which is now a resistance area. And what we're seeing is this particularly happening. So we have a lower swing, and that's going to drive price lower, back down towards 1260, which is our 50% line, then our 61, then our 78.6 fib retracements, all the way down. You can see quite clearly these areas marked out because of the consolidation previously, and that's how fibs work really, really nicely to the downside. So for now, look at 1275 being your first target to break. So on a 4 hour, you want to see that marked out. Okay, very, very important. You want to see these areas being marked out. There we go, 1275 is there. We want to see that area being broken, and price needs to be trading lower than that going into the end of day today, because by doing so, it'll be telling us that price is definitely looking negative, and then we can look to the downside. You can quite clearly see now the last 4 hour candle trading into that, which happened to be coincidental with the 50 period moving average, and you can see we are seeing a bounce as we speak. So if this correction over here is very small, then we'll know that the actual fall from grace here from the top to this bounce over here is quite short, which means that the the actual movement, the selling over here was genuine, generally targeting negative. So you should see the sentiment pullback should be quite small before we see a second extension to the downside. However, remember, higher swings depicts upside trend, and you can quite clearly see that if I take the lows here, the candle lows, or the bodies, oops, bear with me for a moment, there we go. You can quite clearly see that our uptrend is also in place. So we have a bit of a support area being forged at the moment. So we've got to wait patiently for that break of this area here at 1275. Wait for a break of 1275, get lower than that, and then pull the trigger to the downside towards our prior support and resistance morning star down here at the end of this trend on our 4-hour around the 12,6700 mark. Just looking at my hourly entry, you can quite clearly see that 12,7500 mark is very much the institution moving average on our hourly. So quite a lot of support at the moment now. Price has generally fallen into it. Now it needs to, if this bearish engulfing candle after that, the news about Greece is genuine, then the pullback that happens now should be quite shallow, and we should see price reattempting the institution moving average and reattempting to break the lows here at 12,7500, and in doing so getting below that mark where we need to see price moving lower, and then we can start looking at those swing lows to the downside roughly around here 12,700 round number, and then down towards that 12,600. On to sterling. Let's have a look at sterling. What's been happening? Okay, yesterday a bit of upside movements. We have seen price moving tentatively to the upside after finding support on the institution moving average here at 12,8500 mark, and that came after a break of the 1600. Clearly you can see over the past couple of months that price, or the highs, have been falling ever since we ran into a major resistance here at 1600 back in early September. A lot of exhaustion here, consolidation, and price has now been making its way tentatively to the downside. Near term consolidating here at the underside of 1500 and the 1600, the psychological round number, and since then breaking lower, finding resistance on the underside and pushing off to the downside and heading towards that institution moving average. Since hitting the institution moving average, pulling back, okay, and then now coming into contact just short of the 15,9500, which is the 20 period moving average. Now what I've done is I've taken a fib level all the way from the upside, and now you can quite clearly see that these levels have been targeted. 23.6. Here's the 38. We've got the 50 below me. So at the moment now, it's still trading above the 38 fib level. Okay, and as long as it trades above the 38 fib level, then it's going to find intraday support, and I need to know about that. Okay, so as price is trading right now, I want to take a level at here. So what are we looking at? We're looking at just above the 5900 mark, funny enough. So another round number. So intraday, I need to be aware of that, and you can quite clearly see I've drawn on a line over here at 5900, and as long as it stays above the 5900 mark, it's going to be making higher swings because it's pushing off from that institution here on my 4-hour, which I've marked in black, which is the daily institution moving up, and it's moving higher, and in doing so forming higher swings. And you can quite clearly see the near term, yes, it's still negative long term, but intraday it's pulling back. It's consolidative, and as long as it's consolidative above a prior major support and resistance level, then we should be looking for price to head higher. As you can quite clearly see, the last 4-hour candle very, very bearish to start with at the start. However, the top end of this candle now, which will be closing at 9 a.m. GMT this morning, you can see price is finding more incentive at the upper end of the candle, which constitutes that there's more buying sentiment than selling sentiment. So it's imperative to wait for this candle to confirm what it wants to do. So we have a bit of negativity to the past 4 hours. Going into this hour, 4 hours, you can quite clearly see that these prices playing at the moment now with the 1500, which is our fib retracement area at 38. If they find support at the upper end of this candle, there's more likelihood for price to actually find support and move higher, back up towards the high of these candles here before we see price reversing towards the 1600 mark. So what we want to see is clear direction. Okay, at the moment I was looking upside favor at the moment. We've seen consolidation, however, the past couple of days. It's still positive consolidation because it's not making lower swings. Very, very important. Okay, price needs to be making lower swings in order to see price changing direction now, to be forming a negative trend. At the moment now it's not doing that, and because it's not doing that, it's still looking positive. Okay, so as long as it maintains above 5900, there's more likely for chance to see price moving higher. So if it's to be negative, we want to see 5900 being broken. Okay, so look for those signals, guys. Look for those signals that will confirm where sentiment lies, and look at the fundamentals today. We do have news out this morning for sterling. We have the MPC meetings at 9:30 GMT, followed by we have the public sector net borrowing figures. Okay, they're expecting a worse figure than the previous figure. So if there's less borrowing, public sector borrowing, that means that there's contraction. And if you see contraction, that means that there's going to be obviously less movement in the markets. And if there's less movement, then you're not going to see any growth. Okay, you do need to see the wheel spinning in order to see growth, guys. And if there's no public sector borrowing, that means that the public won't be spending their money or looking at doing things to do with it. And if you're not doing any money, if you're not spending any money out there, there's obviously going to be no production. If there's no production, etc., etc., you can see where I'm going. So very, very important. We've got to see a nice public sector borrowing figure that's higher than the one that they forecast here. If they do see that, then we could see a bit of momentum in sterling. If not, if the figure comes out the same as the forecast or lower, you could expect sterling to fall against the US dollar. Okay, so very, very important. Look out for that. That news. Onto the US dollar Swiss franc. Let's have a look at this pair. Okay, daily. Yesterday, very indecisive candle, but nonetheless still finding support and still trading above that 940. 940 previously over the past couple of months being resistance, and near term through November being support. Okay, as long as it trades above 940 now, we should be looking for price to be supportive. And this is quite similar to the European or the Euro, as you can quite clearly see a lot of bearishness going into the support. And then we had a very indecisive candle yesterday, and then we've had a very bullish candle this morning on the news of the Greece having issues trying to sort out their problem there and not coming up with any real plan to sort out their problems with their next austerity measure or bailout fund. And what we have now clearly is what we're having on Euro, but the opposite. On Euro we have an evening star, and now on the US dollar Swiss franc we have a potential morning star. Morning stars happen at a support, a major support after a noticeable trend to the downside. Here, a tiny trend to the downside has been moving back from the highs here at 950, which happens to be our Fibonacci retracement area. But nonetheless, this particular three candlestick pattern occurs at a support, a very strong support, which happened to be prior strong resistance level. So if the US dollar can actually maintain this bullishness against the Swiss franc today and push higher, this could ultimately confirm that we're looking at a major support here or a strong support. And if that's the case, then we should be looking at 950 to the upside as being our first target. Get above that, then always to 960, 970, etc. to the upside. So what we want to see intraday is 940 still being our major support intraday. That's going to be our net, our safety net intraday, 940. And as long as she's trading above 940, then we should be looking for buying sentiment throughout this week. So into my 4-hour chart, you can quite clearly see a nice bullish engulfing 4-hour candle on that 940, which is above the institution moving average. Yes, it's been negative near term because we have seen a pullback. That's bound to happen. However, you can see the trend, the intermediate trend, intraday trend is up. Swing highs to pick upside trend, guys. That means it's a positive trend, and as long as it's trending above a major support and resistance level in the shape of the 940, then we should see price making a reattempt of those prior highs, prior resistance highs here at 950. There's a little smaller trend, very similar. The makeup of the US dollar Swiss franc is very similar to the European, the Euro US dollar. You'll see that there should be a total likeness with each other. They tend to move very, very similarly. Okay, spit that word out. But you can quite clearly see that we have a tiny intraday trend to the downside. Okay, you can see two trend lines. We have our major intraday and our intermediate, or smaller trend. And you can quite clearly see we had it swing low. So get above, it's got to get above this area here. Push higher, and we should see price moving towards that 950. Okay, very, very important. So you're likely to see a bit of a consolidation now because of this major move on the 4-hour candle. That's going to happen. But now we want to see price now on the pullback, moving back very, very short. And when I say pullback short, I mean if you drew a fib from the low over here to the high of this candle, you want to see price trading no lower than 38% of the pullback. So you can see quite clearly now price actually a test of the 38% pullback of this 4-hour candle, and now needs to maintain above that. So if you can maintain above the 943 area, then look to see if price is going to then trigger, because what you want to see, if price is generally moving in one direction or another, that if the momentum that's coming through in that buying or selling is strong, any profit that's been taken after that candle has moved should be quite short and abrupt, because the actual momentum behind that move is so great, it's just going to push it, keep pushing it way ahead or way lower, depending on which way it's moving. And in doing so, you find that the pullback is quite shallow. Okay, this is one you guys should really pay notes of and remember for the future. So if you're trading breakouts, for example, always be patient on a breakout. Always wait to see if that confirmation breakout candle is giving you the genuine sentiment that you want, because with any breakouts, it's got to be breaking out with genuine sentiment, buying or selling, depending which way it's moving. And to decipher if it is genuine sentiment, look to see what the next candle happens. If the next candle starts and the pullback is very shallow and it continues in the direction of the trend, then you know that the sentiment candle that started the breakout has indeed got that momentum that is required to see price moving further. Okay, very, very important. So make a note of that. So looking at my 4-hour chart, what I want to see now, you can see quite clearly I'm looking for a bullish engulfing candle. But by the time I get that bullish engulfing candle, which is my confirmation candle on my hourly, quite clearly you can see 940 was the top of that major support and resistance level on my hourly. You can see prices rallied into the institution moving average. Okay, so now you can quite clearly see that intermediate or that downtrend is in play. So I get above the institution moving average now on my hourly. Okay, and this pullback will be quite shallow. So if it ranges now at 940 and no less going forward for the remainder of this morning, and then finding more mustard as it continues throughout the day and pushing higher, then by the time if you're trading through the US session is trading above the institution, target the upside. Okay, target 950 back up towards our daily Fib retracement resistance level to the upside as our first target. Okay, you can see how you've got to paint a picture. So as it stands now, you can quite clearly see from the low of this candle here all the way up to the current candle where it slammed into the institution moving average. You can quite clearly see that 23.6, 2 consecutive hourly candles took support at this area, forming little spinning tops. Then we had a bearish engulfing candle that's fallen lower, but fallen lower into the 38.2. It's paramount that it stays above 38.2. The further back it falls, the less movement or less momentum is generally behind the move, and if there's less momentum generally behind the move, you're going to find the move's actually going to fade. Okay, we don't want it to fade, because if 940 is a major support and resistance level on our daily, we want to see price actually building on that, so that long term we can build higher and faster. Okay, if you don't get the momentum, then you're going to find it's just going to go flat, it's going to be consolidative, and all it's going to do is it's going to fade off and then reattempt 940 very, very soon. So very, very important to make a note of that. It'll be very, very vital. Last pair of the day is the US dollar Japanese yen, and this has been showing a lot of momentum. US dollar really moving with some gutso over the past couple of days, past week in fact. You only have to look at last week's bullish engulfing candle moving higher. Fantastic, that's what we want. Breaking way above the 80, which happens to be a major support and resistance level for this pair over a number of months, guys. And in doing so, giving us the indication that price is looking upside favoritism. And if you look at it, you take the lows over here to this current consolidation area, move it back, and you can quite clearly see that 100% is not too far off, but 161 is back up towards that 8400 mark. So clearly get above this 8250 mark near term. If you've missed a move, 8250 would be our first target here. Get above that going forward, and we should see price really moving with some guts. So you can quickly see on the daily now, really moving higher since breaking above the 80, our major support and resistance level. Look at the moving averages, all below. Price really trying to catch up, and in doing so, a lot of space between the candlesticks, which dictates momentum, true momentum behind it. Okay, when a trend is really, really strong, you want to see the moving averages with a lot of space between them. When a moving average, when you're seeing a lot of consolidation, you want to see very tight moving averages. You can quite clearly see here we went through this consolidation period just recently. You can see all the moving averages very, very close together, not giving us any true sentiment. Okay, there's no volume in there. When there's no volume, this means the price is not moving. If the price is not moving, you're not going to get anything. Okay, so very, very important. So near term, and most important, look at that. Nice bullish breakout recently, and the follow through. Okay, and notice what I told you just recently about the pullback. How do you know when price is really moving with balls? Excuse my French. Is when you see the move occur and the pullback is so shallow it doesn't even really break 38.2. 23, if it can stick to 23.6 or 38.2 on the pullback, stay above that, then you find that the sentiment behind the initial breakout is strong, and then you should see that building pressure, in this case, moving price higher. And sure enough, pullback was very, very shallow through the Asian session, and then we saw buying right through that entire day on this particular day here on the 15th of November, and it's just taken us up to our first target here at 81.50, which happens to be a price support and resistance level on this time frame on the daily. If I just zoom out, you can quite clearly see a bit of hesitation at this time frame back in what did we get through February, March, April of this year. We saw a bit of consolidation at this level. Now, overnight trading has seen price really rallying through that. Okay, and as long as it maintains above this 81.50 now, we should see price consolidating with the upside still in favor. 82.50 is our major weekly support and resistance level. And then get above 8200, then we'll target that all-important 8400, because that is our major long-term support and resistance level. This is a monthly high on our 8400 mark here. If you look back at the charts, 8400 is a major long-term high. You can quite clearly see as price head into that, very consolidative, and we saw a major pullback since then. So if we're heading into that direction, I can guarantee you that's going to be the institutional long-term target. So as we head close into this area, expect less momentum in the move. It'll still push it higher, don't get me wrong, but expect less momentum in the move as we go into that major target area. As price moves higher, you're going to find that people are going to start taking profits along the way, which occurs to seeing less momentum. Okay, and as we head into the 8400, you'll find that a lot of momentum will actually cease, and you should see very small candles to the upside. But nonetheless, that'll be our long-term target. Okay, first target 82.50, second target the 8400. That's for today, guys. I hope you have a fantastic trading day. Please look at the news to see if there's anything out there that's going to really change sentiment. We've got a lot of US data this afternoon. Unemployment claims, flash manufacturing PMI results, crude oil inventories, very, very important one. Okay, crude oil inventories for the US, that will be very, very important for production. Okay, they're expecting a less figure. So the previous figure is 1.1 million barrels. They're expecting a forecast of only 0.8 million barrels of crude oil to be stored. And if that's the case, that means there's contraction in the production side of things, because you need oil in order to produce things. If they're not using any oil, that means that there's obviously no production, which means that there's contraction. If there's contraction, that means it's quite bad for GDP and further growth. Okay, so that all stems into it. So if we come out with a forecast today where the crude oil inventories for the US is higher than the forecast, then expect movement. If it comes out at the forecasted number or less, then expect movement nonetheless. Okay, so there again, please be aware of all these news announcements. Big one also is German 10-year bond auction. Very important, 10-year bonds. Let's have a look and see how those figures come out. And that's a tentative figure today, so that'll happen anytime this morning in particular. But have a look out and see what the 10-year bonds are trading at and what the interest rates are like. They're expecting interest rate growth of 1.56 over 10 years, and expecting only 1.5 of those people to really be focusing. It's not a really great return for 10 years, to be honest. It'll be interesting to see how those go. So anyway, be aware of it, okay, guys? But ultimately, trade price action. Everything you need to know will be in candlesticks, will be your major support and resistance levels, and look at candlesticks and the sentiment behind those candlesticks. And very much, if you are using this particular template, use it as a guideline. I know a lot of our other students have 5-6 other strategies on top of that as confirmation candles, confirmation signals. Use it all together, guys. Very, very important, and you shall be successful. Okay, back it up with sound money management. Very, very important. Otherwise, have a fantastic day, and I'll see you first thing tomorrow morning. Until then, you trade serenely.